Welcome and good evening, traders. It's our nightly wrap-up of the markets and our trades for today. It is Monday, December 18th, 2023, week before Christmas, last week of trading before that holiday happens. And let's take a look at what happened in the markets today. So SPX jumped up 21 points. Not really much of a day, pretty much just a flat sideways day. It opened up and just stayed there pretty much all day today. SPY ending up 2.64 here, which was basically a 0.5% higher on the day, although it was higher on the session. So even though we had a little bit of a pullback on Friday, we did rebound, build a little bit of that space in there, moving above still the 3 ATR level here, which continues to be at a pretty good 45-degree angle higher. So it's still a pretty good up move. I expect it to probably continue, even though I think we are overbought. If you take a look at RSI down here, you've been overbought almost every day since the 14th, or over a month now. Almost the entire time for that month, you have been overbought and still rising. Now, today we did hit not quite a new high, but pretty close to it. RSI is not quite at that high yet. Are we going to get some kind of divergence here? Maybe, but MACD still growing. And if we look at the weekly here, just heading higher, Bollinger Bands opening up, MACD's heading higher, RSI getting into now overbought territory. But you can see back here, we were overbought as well for a little bit of time, a week or two, and then the little bit of selling came in. So we'll see, does this happen again this particular time? I don't have the answers. I mean, it's right now, it's hard to say you're going to go out. I mean, I just think the risk reward on putting on long trades here is a little bit crazy, but the markets continue to push their way higher, even though everything's pretty overextended. If we look at the Qs as well, hitting back up to, a new high area in here. So you're really right about the almost to the all-time highs now. Overbought, MACD, RSI heading higher, weekly in here, MACD, RSI heading higher, overbought. You're at the 3 ATR here on the daily. You're almost at it here on the weekly. Not much you can say there. IWM also getting right to the top of this area where it has failed multiple times, trying to get through there. We got a gap fill down in here. In fact, I think could make a little bit of adjustments on this gap fill. But overall, just sideways trading. It didn't really do a single thing today as it hit right back to this previous high area where it has failed every single time for over a year now when IWM has gotten there. Will this be the exception? Don't know, but it's a pretty strong, violent uptrend with MACD maybe tipping over today and RSI definitely overdone. All right, we take a look at the number of S&P companies above their 50-day moving average here. And still hanging out right around at 88% level, really at the same level where we have failed a number of times on it. You've got the Bollinger Bands opening up fractionally here as this moves up, but you have the 3 ATR getting a little tighter. So that's an interesting look here. Are we at the tops or are we doggone close to it? Put call ratio dropped again on the session. I mean, it was up fractionally, but just overall, it's going to just keep pulling the moving average down, which is bullish for the market. VIX moved fractionally up 28 cents today. At all, US dollar dropped on the session, pulling back in a little bit as the US dollar still remains weak and in a downtrend. You look at rates had a little bit of a bounce here today, fractionally overdone bounce. I think oversold on this rate sell-off below the 3 ATR here. So a little bit of a bounce there. And then, of course, TLT on the same hand would get a pullback today as it is overbought and now maybe starting to tip over, at least on the daily. Maybe a little bit of a pullback. We'll see. Do we come back down, test this line, and then go higher, or something more nefarious in the works? If we take a look at where things ended up on Forex today, 60 pretty much exactly unchanged. British pound down fractionally, Canadian dollar down fractionally, and the euro up fractionally on the day. Oil had a pretty good rebound day again. So oil has been on a 4-day tear after hitting these lows back on the 13th. It's been up pretty nicely for 4 straight days, breaking above this potential wedge pattern and then failing right at it. So tomorrow, I think it'll be key for oil to see, does the momentum continue on oil? MACD is rising, RSI is rising. I really like it. I have 112s, I got naked puts. And as I've talked about before, I am more bullish on oil than I am in almost anything that's out there trading right now. So I do like oil. I also do like where gold is as well. So I am fairly bullish on gold as I'm gonna keep holding to this trend line here, even though we did break it for a couple days in here. We bounced off it a bit today. RSI and MACD moving a little bit higher on the daily, but tipping over on the weekly. I think it's all good. I'm not massively bullish in gold here. I like where it is. We've got some strangles. It's perfectly situated on the daily for some strangles. I'm not putting anything new on yet, but I think it looks good. Again, bonds, I think they're overextended, just like the market. So I'm not touching bonds at all here. Now, HG did get a trade on in HDG today. So MACD has been moving higher. RSI has been moving higher. We had some pullback today, which was really nice to see. On this pullback, it gave me a chance to get in, put on a trade. I tried to get a strangle trade on. It would not fill after about 5 hours, was not going to chase it. So we'll wait till tomorrow and see, can we get a better price, or we'll try again tomorrow. But I did get a 112 trade on in copper, so I do like it. And then we are still sitting on a live cattle 112 trade as this thing is breaking out of this descending wedge that we have here. MACD, RSI still rising. I like the trade here. We are up 28% in 17 days on this one. Nice 112 trade on live cattle. Take a look at the sectors in the market today. Leading sector, oil. Oil leading the markets about 1.2%, followed closely by XLC. So you get communications doing well, XLP as well on this. So your consumer staples here, the gold miners, GDX ETF. It's had a decent little gap. Doesn't look right on here, so we'll keep an eye on the chart here because it looks like to me it gapped down and then finished higher on the day, but they're giving it a win on the session. All right, so there's where we are on GDX. XLE also off of its highs on the day, but up overall. And then XLY up overall. The bottom feeding sectors, worst sector on the day, biotech, followed by retail, which had a huge gap up, followed by just a flat semiconductors after just a massive 100% run. All right, and if we take a look at the Magnificent Seven and the big names out there, you had Apple on a pretty good down day here, gapping a little bit lower. RSI and MACD tipping over a bit here as we fail at that recent high. Microsoft, though, trying to get higher with MACD and RSI moving higher, so some divergences in those. Amazon having a huge day today. We already talked about this in the sectors, that communications and consumer discretionary having a pretty good day. Amazon on the breakout, running higher. This thing is looking pretty strong here. MACD, RSI both moving higher. If we take a look at Meta, here as well, having a pretty good update, up almost 3% on the session. Google up 2.5%, big update on Google. NVIDIA up 2.5%, good update on that. And then Tesla just struggling, but on the breakout, it just didn't have any more oomph, but it's in a squeeze right here. I think that this thing potentially rocket a bit higher. Netflix, not part of the Magnificent Seven, but part of the FANG man type trades. MACD, RSI moving higher, and then cost. I almost want to move Costco up here a bit. It's probably one of my favorites to look at. I mean, Costco just off to the races, getting super overextended. You had earnings here. I'm trying to pull these up. Earnings, just beating expectations pretty decently. Stock didn't like that and then rocketed 2 full days. I mean, this thing absolutely overdone. I think this is asking for a bear call spread to be put on here, but some new highs on Costco. All right, let's take a quick look at the account that we are trading, and here's where we are on the account. Overall, minus 52 delta. So the minus 52 delta, perfectly delta neutral, nothing to do. Our theta to our net lick is 0.29. It's a little light. I would like to get some more theta in the account. I did throw on a 112 in HG today. Overall net lick jumped again, 3.31, so one of the highest we've been in a week, and just fractionally off of a new all-time high. So pretty close to a new all-time high in net lick. BP moved up a bit today, 64%. 10% of that's bill, which puts us at 54%, 54.5%. Totally fine on buying power right here. We picked up $150 on the session today. That $150 was a 0 DTE call credit spread. I put that on today and took it off for a 55% winner. Only a half position, but I'll take the $150. So overall, not too shabby. We still have some trades we're expected to close this month. Definitely some naked puts on some 112s, and potentially we've got some strangles to close. We've got a gold strangle at 44% winner, so it's right there. We've also got an oil strangle that's at 30%. We've got another gold strangle at 28 and 29%. So there's a couple strangles here that might also come off. We've got some naked puts in oil that also might close. I've got a naked put right now at 30%, so that could close. So we've got definitely some more trades that could close in the next 2 weeks. So we'll see how those manage to change out or clean up some of the spreadsheet below so that the numbers are dead on. You can see here, long-term 112, definitely our number one strategy, sitting at 50 grand in realized gains on the year with 100% win rate. Followed in second by our future strangles, as per our plans, our number two. We're up 27, almost 28 grand in that with an 89% win rate. Followed by 112 futures trades on other futures. These are up 24 grand on the year, and then some 0 DTE trailing that up about 10 grand, and then some losses on some leaps and some spec trades down there. So overall, we're just sitting right at like that 99,000 level. We broke it briefly before we took 2 strangle losses. I think we'll get back over it before we close the year. Overall, our realized P&L on the year is 39.57. So 40%. We are up 40% in realized gains. So we've made 40% in closed trades. And then our P&L, just using our net lick alone, is up 32.5%. So overall, not too shabby of a year. 33% increase in the account and a 40% gain in all of our closed trades from a realized perspective. I would expect that if some things go our way here, we'll see these numbers move up higher on the net lick. Most of it right now is with the market only going one direction. So if we get some pullback in ES in the next week or two, that should help our net lick move up nicely. So I'm expecting, hopefully, some sort of a pullback. We are overdone, but we're set up perfectly with a 112 trade. I think the risk reward is good in here. If we go higher, we win. If we get some pullback, as long as it's not catastrophic, we should be in good shape there. So if you like the video, please go ahead and click that like button, and we'll also share a little bit of the closed trade here from today, just so you know why. And then also, if you're not a subscriber, go ahead and subscribe to the YouTube channel. We did do a call spread, call credit spread today. We did the 47.55, 47.85 call spread. We did that pretty early on. 55-cent credit we took in. We closed it for 25 cents. 55% winner, made $1.50, so $150 on the trade today. 1% return on our buying power. So again, helping out our zero DTE trades. It's nice just to pick up what, 700, a grand. I mean, you picked up almost $10,000 this year, so almost $1,000 a month. That's considering we had a loss of almost $17,000 in April on zero DTE, and we're still up 10 grand on the year. So unfortunately, that was a pretty bad month for zero DTE, and changed my complete strategy around. And since then, we've been really profitable, and we've been able to put on somewhere in the neighborhood of almost $10,000 in the last 5 months alone. Didn't trade it much in November, not trading it a lot here in December, but the win rate's really good. So we're averaging about a 75% win rate on those zero DTE trades. So it's just a nice add-on to what we're doing. We're positioned well, very delta neutral. We have plenty of buying power here if the market starts to go against us. We've actually got negative delta, so if the market does start to drop, we should start to do really, really, really well. So we'll hang in there. We'll see. If the market starts to reverse on us and pull back, we're going to be in really, really, really good shape to finish out the year here, especially if we get a pullback. If we don't, we're still going to be making money either way, and we will be taking some trades off pretty shortly. Here we're almost at the 95% mark on some naked puts, but we are really well set up for any kind of a pullback in this oversold market. All right, I hope this was helpful to everybody. Have a great evening, folks. Stay safe, and we'll see you all in trading tomorrow. Bye-bye.